Hey folks, Navy Dowdy here in the great Midwest in the Chicago area in the fabulous United States. Generally speaking, there are three waves or different types of tax filers. The first contains the people with W-2 jobs, kids and daycare, and they have had taxes withheld that, when refunded, are a big part of their income. They generally file in late January and early February as soon as possible so they can get their refund. And who can blame them? That job is done. Those folks have filed. The second wave contains people with more complex assets, and it's a flip of a coin for them. Sometimes they owe and sometimes they get refunds. So they still want to file as soon as possible, but when the return is done, it's like waiting for the medical test results. They say, well, was it good news or bad news? That wave is now also ending for this tax season. The last group are the people who owe more taxes. They wait as long as possible to file, since why be in a hurry to face the executioner? They are usually filing longer and more complex tax returns. They wait until there are 2 weeks plus or minus left until the regular filing deadline, but they don't want to file an extension, so they're usually in a mad rush. These in the tax preparation world are the most dangerous returns. They are complex and preparers are fatigued, so error rates are creeping up. Error is human after all. 15-hour days for 8 weeks is not any easy mind marathon to run. Usually these taxpayers have unpaid estimates or underpaid estimates, under withheld, and owe more than $1,000, sometimes more than $10,000, so that means additional interest and penalties. What's the point of these groups of filers? Hopefully people in the third group are reading this and saying to themselves, yep, that's me, and they will take this friendly advice from people in the know. That is, with very few exceptions, go on extension and do not attempt to file now. Why do we say this? Because of the facts. Your assets are more complex, your preparer is tired, you owe, so why be in a hurry? Just go open and fully fund IRAs just in case. Here's what to do. File an extension, which is free and easy to do. Let the preparers get some rest and then file in June. Your preparer will do a better job and you will get a better result. Open an IRA, since you can't do that after the regular filing deadline. It might end up as a non-deductible IRA, but if so, you can just make that into a Roth IRA later. And good news for this year, they made an exception. If you have a small business, you can still set up your qualified retirement accounts and get a deduction still for last year, even after the tax filing deadline, right up until October 15th. The most important thing to realize is that filing an extension to submit your tax return does not give you an extension to send in any taxes due. If you're going to file on time, you would have to send a check with the return. So send the check with the extension and send it registered mail, return receipt requested. Or if you file online, use an IRS-approved third-party vendor and make an online payment. But how do you know what to send in if you haven't finished the return? Which is why you are in a rush. You don't have to know the exact amount. Just send in 110% of whatever you owed last year, less what has already been paid in. This will qualify you for the safe harbor rule, which is an IRS accepted standard that will allow you to avoid late payment penalties. You're going to file in June, a few weeks from now, so you'll get any overpayment back quickly. If you had a very large anomaly event, like you sold a business or won the lottery and didn't do any other planning, and you're going to owe double or more than last year, then you won't be able to rely on the 110% safe harbor trick, so file on time. One last thought. If while on extension you take the time to go see a qualified tax planner, you might be able to lower that tax bill as well. Most preparers are not really planners and may miss many recommendations that a planner might have made. I'm Navy Dowdy, and remember, financial fitness can be beneficial to your wealth.